How's it going, y'all? Today we're gonna do some analysis, but also a little trade recap, as I actually recently just took a loss on a Euro USD trade. Actually, just now, just got stopped out. No big deal. You know what I'm saying? Like the market does what it does. We go again. The trade fit my plan, and I'm just very happy about that because I've actually been having some problems recently about taking trades that don't fit my plan. This one fit my plan to a T, so pretty happy about it, regardless of how it turned out. You know, an opportunity is definitely still there on the euro, but we're going to get down to that later. So, starting again on the weekly, as we always do, we have again, as you know from previous videos, a nice descending channel overall with a nice 1-2 touch at the top, looking for a third touch at the top possibly, or a break or an ultimate break of this descending channel to complete this 90% rule. Also, with on the weekly and on the daily, it's easier to see as well. We also have another descending channel with the same bottom. So I'm going to show you that. Just pull this out a little bit. With the same bottom, right? Nice 1-2 3 touch of the bottom, 1-2 touch of the top, and we possibly could get another touch of the top, right? That's always a possibility, but again, it's always about possibilities and probabilities. Not saying that we know what the market is going to do, because we never know what the market's going to do. So also on the daily, and it's the first time that we can see this ascending channel here, right? And at first I had it from a different angle, but upon further review and speaking to other people, I realized I was probably wrong with that angle, and that these were my most recent significant two touches. And although you may be like, oh, so like, why are you telling me, why are you making a video if you can't even put the lines right? It's not about that. It's about showing people that you make mistakes, showing people that I make mistakes and everything like that. And I'm not saying like, oh, I make mistakes too. I'm some great trader, blah, blah, blah. No, it's showing people that I make mistakes. Here's how you work through it. And I'm documenting my journey. So when I am, way more consistent and a lot better of a trader, and I say a lot better of a trader, meaning I take trades that fit my plan and I, understand the probabilities and the possibilities and I accept those probabilities and possibilities. That's the only way that we're good traders. It's not about the system that you have. It's not about the way you analyze the markets. It's literally just about your mindset of trading. Because anybody can analyze the markets any way they want to, right? I was just having this discussion with this trader on Instagram about how he used to use Falcon, but he doesn't really use it anymore because he felt like it wasn't really for him. And like he thought I like got offended by him saying that because he knew I traded using Falcon, but I was like, no, bro, like I'm not offended at all. Like I completely understand that trading is more of an art than a science, and that everybody has a way of doing things, right? So like if, for example, we talk about somebody like Akil Stokes, who is a definitely a consistent trader. Nobody can deny him that. If you know anything about Forex, you probably know about Akil Stokes, and you probably know about his videos, and you can't deny that the man's a consistent trader, right? And one way that he trades is he uses like harmonic patterns or something like that called like bats, Gartley, butterflies, crab patterns, whatever. He doesn't use all those patterns, but like those are the type of patterns he trades. Those patterns make absolutely zero sense to me. Absolutely zero sense to me. But you know what? They work for him, and they've worked for him for the past few years, and he's consistent. Austin Silver is another good example of this, where he uses indicators. I use price action and just structure and, trend lines and stuff. And I'm not saying that indicators don't work because, again, he's been consistent for a minute using indicators, but it's all about what works for you and what you feel comfortable with. So that's kind of what I'm saying, in that I don't want y'all to think that you have to trade one certain way or anything like that. You trade whatever way works best for your psychology. That's the biggest lesson I've learned. I had a trading style earlier and it was good, but it wasn't good for my psychology. I was often second guessing myself and just going back and forth between what it was that I should be doing. And I knew that ultimately, when I wanted to be trading at scale and trading way more money and possibly trading investor money, I can't be doing that, right? I can't be thinking, I don't know, right? I have to be very comfortable. And that's one thing that I will say about Falcon is they make me very comfortable in the markets, like psychology-wise, right? And that's the most important thing, is making sure that your psychology is completely right, because that's the most important thing in trading, is psychology, not how you analyze the markets, but your psychology and how you approach the markets. So getting back to the analysis, again, we have this daily ascending channel right here. It's more of a wedge pattern where you see 1, 2, 3 touch at the top, 1, oh, deleted it, 1, 2 touch at the bottom, right? I'm going to delete some of this stuff so you can see it a little bit better. Get this away. All right. And so ultimately, also, if we go down to the 4-hour as well, sorry about my voice. I've been a little bit under the weather. If you go down to the 4-hour as well, we can see the wedge pattern / ascending channel just a little bit better. We can also see that we got to the top of that, or the third touch of that ascending channel, in the form of an ascending correction with a middle section, right? So we can see we have, 1, 2, double top here, break down lower, third touch here, also triple top in this area, right? And you also have the 1, 2 touch at the bottom. And so then if you go into here, you see correction, impulse, correction, impulse, correction, right? And so now we're looking for this to break down lower and break out of this ascending channel, and ultimately push lower here to around this double bottom area. Because although we are looking for at a weekly ascending channel, descending channel, and the higher time frame momentum is pointing to the upside, there's always a possibility that price could come down one more time for a double bottom or a third or another touch of this trend line before ultimately going higher and breaking out of that daily and weekly descending channels, right? And so with that in mind, that is why I was okay with taking a few trades in here, looking to come to the downside, right? But with these trades not going in line with the higher time frame momentum, I would classify them to myself as more valid trades as opposed to high probability trades. And so with that, I had to be a little bit more patient with my entries, right? And I'll show you what I mean when I get down to the 1 hour. But again, if we're just looking at this ascending channel that we got the third touch of this overall ascending channel with, we have 1, 2, 3 touch, 1, 2, not third touch, but around that area, right? So basically, once we have the touch of the third touch of the top, that's a completed pattern, and that's more high probability. Again, it's still a valid trade because it's not in line with the higher time frame momentum, but it's a little bit more of a high probability valid trade, right? And that's the whole idea of not being so black and white with high probability versus valid, because there'll be, valid setups that are a little bit more high probability than other valid setups. And this is the one I took that I recently took a loss on. Is definitely one that if I were to take it again and again, take it 10 times out of 10, I would take a loss on that 10 times out of 10. I'd be comfortable taking a loss on that 10 times out of 10, just because of the setup. It fit my plan and it kind of lent itself more to the more high probability areas. But we're going to get down to the 1 hour. I'm going to clean this up just so we can see this. Right. And so then on the 1 hour, we can see this ascending channel that we got at the top of the 4 hour ascending channel, even better, even clearer. I'm going to neaten this up a little bit like that. All right. And then also you can see that in this triple top area, where it's also a third touch of the ascending channel, we got a breakup, we got an impulsive. If you've seen the other videos, you know what I'm talking about. You've got an impulsive break above, impulsive break back down below, more expanding correction, but it is the first correction. And a break lower, right? And then after the break lower, we're getting this larger correction, this first larger flag, right? And within this larger flag, we could see that, if we clean this up a little bit, you could see that we have this angle right here, and we had 1, 2 touch, sorry, 1, 2 touch, and then as we got the break above again, we got to break higher again, break above this double top. It's the same type of thing that we were looking at up here, right? We got I'm gonna clean it up just so y'all can see it. I'm gonna take this line away. I'm just leaving this on right now so y'all can see where my entry was, but I'm gonna take the line away just for the time being, just so y'all can see it. We look at this double top within the pattern, we can see that we got an impulsive break above and an impulsive break back down below, and then the first correction. Same thing we were seeing here, right? Impulsive break above, impulsive break below, then correction, and then a drop. And that's why I say 10 times out of 10, I'm comfortable with taking this trade. And that's why I have it in my plan this way, just because after a double top or a double bottom within a pattern like that, I want to see the first impulse and then first correction. And that's what we got here. We got the first impulse above, impulse back down below, correction. And if we just kind of this first correction, 1, 2, 3, 4, 5, 6 corrections ready. At that point, I place my entry right below, right here, right after this, doji candle right here. Because after six 1 hour candles, the first tight correction is ready. So I'm just gonna put the line back on. And ultimately, all that happened was we just moved out correctively. We got an impulse out and a corrective move up. I'm gonna hide this just for the time being. We got the impulse out, corrective move back up, and another impulse back down. But I had no space to manage it. I had entered here, and so stop loss was about here. So waiting for 1% to manage and move to break even. Didn't get it, you know what I'm saying? So that's just one of those ones where you get stopped in, stopped out. And there's not a lot that you can do about it. That's just probabilities playing out. And ultimately what we're getting here is, if you look at it, we're getting more of this. Again, I'm just gonna clean this up just so it's easier to see. We're getting more of this middle section. This isn't the greatest impulse, but it's the pole, middle section, and then move higher, right? So that's ultimately what we're seeing here in this area. And so then if we just boil down to the 15-minute just to filter and make sure we have our angles right, I'm definitely still looking for another entry on the euro. But again, I'm going to be patient with it because I didn't chase this one, so I'm not going to chase another one. And that's a problem I've been having with my trade, is chasing entries. And, I was just very, very happy. This is the first time I've, in a minute, I've been stopped out in a trade, and I was just like, who gives a fuck? Who really cares? Because that trade really fit my plan to a T. This right here, waiting for the first, after a double top within a pattern, within a corrective pattern, and a break back, and an impulsive break below, and an impulsive break, and first correction is within my plan. Also within my plan is waiting on the third touch, right? So I could either take more, and that's really just for valid entries. Riskier entries, I'm more willing to take it on the double, more high probability entries, I'm more willing to take it on the double top, especially on an ascending double top like this, right? I was looking to take this on this ascending double top right here, but I knew that that didn't fit my plan. I knew that that for valid entries, it was in my plan after a double top or a double bottom to wait for the first impulse, correction, then impulse, And so that's why I was completely comfortable with taking that one and taking that loss. And now we're starting to get a move up into this area, right? And so if we can just kind of get this move corrective, this is when I'm going to start looking for risk entries or break of this ascending channel right here and a break below. Because again, we're in line with that high time frame area, higher time frame double top area. And ultimately, because we're in line with the higher time frame double top area, we could keep moving higher. We don't have to stop right here because, again, price doesn't have to do anything. We could keep moving higher and just kind of correct, move out, and just kind of form more of an extension of this pattern as we break higher before breaking lower. Tight correction. Here, I'm also going to be looking for risk entries as well. But if I don't get the risk entry, I'm perfectly fine taking that first 15-minute correction, 15-minute hover, whatever might come. Oh, don't want to trade. Yeah, 15-minute correction, right? So that's what we're looking for there. Also, we could see in this area, just triple higher. First solid 1 hour retrace, and I mean solid 1 hour retrace. That's also a good area that I would be looking for to get a risk entry from, you know. But again, with the idea that this could continue higher and this could continue trickling higher just to fill this liquidity right here at the 1.1200 area before we move lower. Or ultimately, because the higher time frame momentum is pointing to the upside and we're in this ascending correction, if we get more of a descending running channel at the end of this descending correction, then I'm going to be looking for risk entries to get entered for the buy. Because again, these are more valid entries, right? I'm willing to take a couple bites at the apple with a good impulse correction. And then if that doesn't work, the next risk entry at the third touch or completion of the pattern. But again, this is a valid entry. So the higher time frame momentum can always override. So if we get that running channel, I'm perfectly fine with taking that running channel to the upside. It's just about staying open to all the opportunities that are in the market and staying on the ball, right? And ultimately protecting your psychology so you're willing and able to take that next trade, right? And that's where taking a trade that fits your plan comes in, to protecting your psychology. Because the minute you don't take a trade that fits the minute you take a trade that doesn't fit your plan, your psychology is all over the place. Let me tell you from experience, because it's the worst. You're second guessing every other trade every other opportunity that presents itself in the market, and you can't do that in the market. You can't be second guessing yourself and everything like that. You need to be sure in your plan, and that's why it's important to follow your plan to a T. One thing that I'm learning and one thing that I'm very proud of. And right now, we are getting this more 15-minute, retrace, but I want to see how price closes. Ultimately, I don't think price is going to be ready to go right now because it is a bit earlier in the session, but I'm not going to say that price can't go right now, because that would me be pretending that I know when and if price is going to go, right? Ultimately, if we get tweezer tops in this area or a nice solid 1 hour retrace, any of my risk entries, I'm going to be looking to take an entry from this area or from this double top area or possibly from this liquidity area if we get more of an extension of this pattern, right? If we get more of a corrective move out to fill the liquidity and a break lower, right? As I was saying before, just more of an extension, because if you look at it, nothing's really changed, right? Like it just moved down impulsively and then became ascending. So that's what we'll be looking at on the EURUSD. Took about a 20 pip loss on the other trade, on the first trade right here, where I got entered off again. I'll show you one more time. Where I got entered off of this impulse correction, right? Took a nice 15-minute, nice 20 pip loss there. No big deal. We move on. We go again, right? So that's what I'm looking at on the EURUSD for today. Going to be on the ball, seeing if we can get that entry around this area. If not, see if we could possibly be getting more of a running channel or possibly an entry around these liquidity areas or double top areas. But I also have to be on the ball for more overrides, because, and this is the last thing, because you have these wicks up here, right? And this again goes down to what I've been talking about in previous videos, and that is reading in between price and learning how to read in between the lines, right? And so if you look you look at these, just pull this back just so it's easier to see. Also delete that just so it's easier to see. If you look at these areas, right, you see these wicks. They might just look like wicks, but they're more than just wicks, right? Just pull this one, so we go down to the 15-minute. We can see that that is also a good area, a good double top area, right? So that's what I mean when I'm saying the override. We have to be on the ball and not just be waiting and just saying, oh, I have to do X, Y, and Z, or it has to do X, Y, and Z. When you force yourself on the market doesn't like that, right? Like the market's not going to go for that and everything like that. Market isn't different to you, but the market will take your money if you get arrogant, right? And so I don't want to have to tell the market that I need anything from it. I just want to be able to spot the opportunities that are present within the market. And so if we get an opportunity around this area for a risk entry, definitely take it there. Our solid 1 hour retrace. You could also get it here again with the override, or we could go all the way back up to 112 and break lower again. Or again, we could get more of the descending running channel within the ascending correction to get a push higher. Those are the type of entries that I'm looking at right now on the EURUSD. Hope you enjoyed it. Hope it provided some value to you. Again, not saying I'm a guru, but just out here trying to document my journey, and not just for me and everything like that, but just to be able to say that like I can look back on everything and really show the progression that I've made and everything like that, and show other people that it doesn't just happen overnight, right? I'm not saying that I'm a success, so yeah, you should listen to me. That doesn't happen overnight. But when I ultimately am successful, because I truly believe I will be successful in trading, I'll be, I am consistently profitable. But ultimately, when I'm more successful with the Falcon strategy, is what I'm saying. I want to be able to show people, here's the journey. You know what I'm saying? Here's what you have to go through. It's not easy. It's not black and white. It's not going to be you come in and 2 months you get it, and boom, you have it. You have everything down. You have everything down packed. You need to spend time, work at it every single day, focus on your processes and routines, and you'll be successful. So yeah, hope you enjoyed it. Hope you enjoyed the video. Please join us again next time.